Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. We begin with breaking news this morning. The controversial and disgraced Bamban Tarlac Mayor Alice Guo is arrested in Indonesia. The Philippine Justice Department confirms that Guo was nabbed in Tangerang City Wednesday midnight. This comes weeks after she was reported to have left the Philippines amid intense scrutiny over her alleged ties to illegal Philippine offshore gaming operators, or POGOs. Her sister, Sheila Guo, and business associate Cassandra Leong were also arrested in Indonesia 2 weeks ago and are now being detained here in the Philippines. Sheila Guo has said that she and her sister Alice left the Philippines by boat. Now, in other news, the national debt hits a fresh record high in the first 7 months of the year. The nation's debt level increased by more than 1% from June to 15.69 trillion pesos on the back of higher domestic and external borrowings. This already accounts for 97.71% of the over 16 trillion peso total debt projection for 2024. On a year-on-year basis, the nation's outstanding debt is up by over 10%. More than half, or about 69%, came from domestic sources, while the rest, or 31%, came from foreign sources. Billionaire Ramon Ang prevails in his legal battle against the Energy Regulatory Commission, or the ERC. This after the Supreme Court allowed Ang's Cignal Corporation to terminate its power supply contract with Meralco after rejecting the Energy Regulator's motion for reconsideration with finality. In denying the ERC's motion, the Supreme Court found no substantial argument to warrant a modification of that resolution. This follows a 2023 Court of Appeals ruling which reversed a prior 2022 ERC decision denying a rate hike petition filed by San Miguel's power subsidiaries and power distributor Meralco. San Miguel sought a temporary increase in the contract price under the agreement with Meralco to recover incremental fuel costs amid an unprecedented spike in fuel prices. Overseas, U.S. presidential Democratic candidate Vice President Kamala Harris is set to propose new policies aimed at supporting entrepreneurs, particularly the smaller businesses. At a campaign event in New Hampshire on Wednesday, Harris is expected to call for a $50,000 tax reduction for startup expenses. That's 10 times the current $5,000 allowable reduction. Harris will also set a goal of collecting 25 million new small business applications, an amount that's 6 million more than the Biden administration has recorded so far. The proposals come just days before her September 10th debate against Republican presidential nominee Donald Trump. Trump has positioned himself as the more pro-business candidate by attacking Harris's economic record. Over in South America, tensions escalate between Brazil and one of the world's richest men, entrepreneur and investor Elon Musk. The billionaire satellite broadband company Starlink backtracks and will now comply with the country's order to block access to social media platform X. That's despite what it claims is the illegal treatment of Starlink after Brazil's top court froze its assets. The country's telecoms regulator also threatened to sanction Starlink after the company initially refused the court order for all internet providers to block domestic access to X. Brazilian President Luis Lula da Silva is backing that order, saying it's a sign that the world is not obliged to put up with Elon Musk's far-right ideologies. Meanwhile, Musk decries the move as censorship. Brazilian officials investigated X amid the alleged spread of hate and misinformation on the social media platform. Still in Brazil, the nation's economy there grows much more than expected. The country's gross domestic product, or GDP, expanded 1.4% in the 3 months through June, accelerating from the 1% growth recorded in the first quarter. The latest figure is also above market expectations of 0.9%. Meanwhile, year-on-year growth reached 3.3%, surpassing the 2.7% increase expected in polls. The surprise expansion was mainly due to the strong performances of the services and industry sectors. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Over in Wall Street, U.S. stocks had their worst day since the global sell-off last month as fresh economic data sparked new concerns over the health of the world's largest economy. The Dow Jones Industrial Average lost 1.5%, while the S&P 500 lost a little over 2%. The Nasdaq dropped 3% as tech stocks got hit the hardest by the sell-off, with chip giant Nvidia plummeting nearly 10%. This after the Institute for Supply Management's report showed that U.S. manufacturing remains subdued, rekindling concerns over slowing growth within the U.S. economy. The heavy losses come ahead of the release of highly anticipated jobs data later this week. They also mark a gloomy start to September, which is historically not the best month for the stock market.
It looks like a big down day today, and while it's hard to determine all the reasons for it, particularly in a relatively short period of time, I think perhaps you do have the ISM survey that came out a little bit disappointing and maybe suggesting that we're closer to that soft landing or being in a recession than we were. And we all know that the Fed is so data dependent. So they're probably going to be looking at this particular piece of data.
Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, we're seeing a sea of red. Looks like that sell-off in Wall Street is continuing here. PSE index is down by 1.5% to 67.78. Broader all shares index down as well, down by 1%. The financials, industrial holding firms, services, mining, and oil and property counters are all in the red, with the financials and property counters more deeply entrenched in it. Financials down over 2%, and the property counter and holding firms now down by 1.32% and down by 1.3% respectively. Now, to help us make sense of these numbers, we have with us Luis Limlingan, the head of sales at Regina Capital Development Corporation. He joins us live. Hi, Luis. Thanks for being here with us.
Hi, good morning, Mikey. Thank you for having me.
Luis, it's been a tepid start to September. It looks like that the sell-off in Wall Street overnight is trickling down here to our market as well. Can you talk to us about this consolidation that we're seeing?
Yes, well, when you invited me yesterday, I was thinking of how to phrase September, and now I have to change the narrative after what we witnessed, when we woke up today. Again, I think we saw that August saw quite a substantial rebound after the sell-off during the end of July, when the Bank of Japan suddenly increased their interest rates. And then, at least locally, as far as we're looking at, the data was very encouraging. GDP numbers the GDP figures were quite or higher than expected. Inflation was under control. The corporate earnings were good as well. We got another positive rating from RNI, given our to reinforce our investment grade status. And that's why we saw that August did climb higher, contrary to what everyone's expecting during the ghost month. And of course, for September, the US just came off of a holiday, and they're greeted by these two readings on the manufacturing index, which were below expectations. And I think they're very worried, given how high the market is on their side. And now they're probably taking profit, and they want to see the data that comes in, especially employment.
Yeah, that's right. The market is really driven by data, and this week we've got a slew of economic data on the horizon. We've got August inflation out Thursday, jobs data out on Friday. Now, these figures are important because they help us gauge the health of the economy. That said, what are your expectations, Luis, for August inflation?
Well, I think everyone is expecting this to fall below 4%. I think last month's 4.4 was, I think, the highest in, I think, 8 or 9 months. So the food prices, they said, have stabilized. There might be some volatility in electricity and fuel, though. But I think everyone's expecting it to come at around 3.5, maybe even lower. So this will actually give some wiggle room for the BSP if they're looking to further cut rates in the future.
Mm-hmm. That's right, if inflation falls in line with expectations. Now, the government expects inflation for the period of August to come in between 3.2 to 4%. Inflation at this level, what does this tell you about the health of the Philippine economy?
Well, the administration has always been targeting a range of 2 to 4%. That's within the acceptable range. So at least it gives us leeway to further cut rates, no? And at least it makes for businesses that want to take out loans, at least it becomes cheaper for borrowing, because we have seen uh, over the last 6 to 9 months that loan growth was actually decelerating at the single digit. It was no longer at the double digit mark, no. So at least, again, you want inflation within acceptable range, uh, you know low enough so it's not going to put a dent on the businesses and pressure, but not so low as to be close to a deflationary environment.
Correct, because inflation is important also. It's healthy for a growing economy. So Luis, the BSP is going to be meeting to talk about interest rates on September 12th. A lot of what they're going to do is going to be hinged on the results which come out on Thursday for the August inflation print. What do you think they're going to do if inflation stays in line with expectations, between their 3.2 to 4% range? What do you think the BSP is going to do in terms of rate cuts? We saw a cut by 25 bips in the previous month. With inflation in line with expectations, how much of a rate cut are you projecting at Regina Capital?
Well, I think they still want to see what the August inflation is going to look like now that because that's just going to follow their meeting. I think also they might be looking at what the Fed is going to be doing, and all signs are pointing to the Fed already having a rate cut. But that being said, there is a possibility that they might cut rates, but I think they could still also do a wait and see and wait until the following meeting, right? But at least I think they have the ability now to time it. There's room for them to time it. I think also there is a lag effect, but let's not forget, when you cut rates, again, this is going to stimulate activity. So as I said a while ago, people will be taking out loans, right? There's going to be more money in circulation. And so this could also sort of, I guess, trigger more economic activity, which also could put more pressure again on inflation. So I think they have to be careful not to suddenly start cutting as abruptly. So they're also going to be waiting for more data.
That's right. It's going to really help stimulate economic activity, interest rate cuts. Speaking of interest rate cuts, over in the U.S., the Federal Open Market Committee is going to be meeting to talk about interest rates on September 17 to 18. A rate cut is widely expected. A deeper cut would be icing on the cake. How do you think this rate cut in the U.S. is going to spill over to emerging markets like us? How do you think it's going to affect asset flows?
Well, I think a lot of economists and investors and analysts alike already have factored in a September rate cut. And I think that's why we saw in August that the market already started to climb, because they're already factoring this in. Now, I think we shouldn't just be looking at September, but probably ahead of that, right? After this rate cut, when will be the next rate cut and so on. So I think, given that there is already some concerns on the employment market in the US, so long as the CPI in the US is able to hold, I think we're going to see more rate cuts after the first one. In September, if it starts already.
Okay, now on to another data point. Philippine debt reaches a fresh record high in July, up 1% from June to 15.69 trillion pesos on the back of higher domestic and external borrowings. Is this a concern to you, Luis?
Okay. Well, of course, everyone wants generally lower debt, but to the extent that your debt is at a level where you're able to maximize, right? Okay, so that's one side of the picture. The other side is you have to look at the debt relative to your ability to pay. And usually they're saying the best gauge for that is your debt to GDP.
Yeah.
So historically, we've actually been at 60%. So it does look high. But if you compare it to the other Asian economies, I think it's already much lower. I think their debt to GDP, they're saying on average is around 85, even close to 90%. So respect to the other economies, we have a manageable debt to GDP. So we have to maintain that level. The second thing is what's working in our favor is, and that's why good for the BSP, is that they're cutting rates. So the interest rate payments are actually going to be hopefully much lower moving forward. So that makes it also good for us when we start cutting rates with respect to the debt to GDP.
Okay. That said, with all those interest rate cuts kind of like baked into the cake, Luis, where do you think it's going to take the PSE index in terms of the year-end targets and perhaps into 2025?
Well, again, like I think everyone last month was pointing to upwards of 7,000. And again, here we are this morning. We're seeing a correction just to begin September because they're thinking there's going to be weakness in the U.S. economy. So the bets are again stacked. Will it be a soft or a hard landing? Last night I was just reading. I think they were saying that the probability is only at 25%. I don't know if that's going to be changing now, right? Probably not yet. They're probably going to be looking at the employment data in the U.S. when it comes out later in this week. Of course, probably they're going to be reading into what the Fed is going to be discussing now. It's not just going to be the interest rate. What is going to be the rhetoric of the Fed moving forward? What are they going to be signaling? So those type of things, right? I would hope that we're able to maintain this level so that we can still challenge 7,000 at the end of the year. But a lot of things can happen. I hope that the data, this is just a minor hiccup that we're seeing in the manufacturing gauges, and then the following data again will I guess reassure investors that they can still buy into the market.
All right, more data, more directions. Thank you, Luis Limlingan, the head of sales at Regina Capital Development Corporation, for your insights on the market.
Thank you very much.
We're taking a quick breather. Basis Points will be right back. Welcome back. Hong Kong's flag carrier Cathay Pacific inspects its entire Airbus A350 fleet after one of its planes encountered engine problems. The airline says the engine failure was identified during a flight from Hong Kong to Zurich on Monday. Cathay Pacific has now identified 15 aircrafts with engine parts that require replacement. Amid the inspection and repair work, the airline canceled at least 34 round-trip flights. All affected aircrafts are expected to resume operations by this Saturday. The engine manufacturer Rolls-Royce says it's committed to working closely with Cathay Pacific, Airbus, and officials to conduct a probe into the recent incident. Gasoline stations in the Philippines will soon be required to install electric vehicle charging stations. The Energy Department says that they plan to release draft guidelines for the policy by the end of the year, while implementation is expected in 2025. The DOE notes that they hope to boost electric vehicle adoption in the country by making charging facilities more accessible. The rules will also be based on Republic Act 11697 or the Electric Vehicle Industry and Development Act. Under the so-called EVIDA, gasoline station owners will now be required to install and operate charging stations for commercial use. Now, before we go, severe tropical storm Enteng has left the Philippine area of responsibility, but the enhanced southwest monsoon will still bring rains to the country. With this, classes in all levels are once again suspended in several areas. These include some parts of Metro Manila, Rizal, Bataan, Bulacan, Laguna, Benguet, Ilocos Sur, and La Union. And that's it for Basis Point. I'm Maiki Oreta. Please stay tuned tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.